Gino, how do we underwrite and evaluate deals quickly?
This is a challenging question for beginning investors, Jake, because beginning investors, when they get out, all they want to do is, I need deal flow. Give me a deal. I got to find a deal. Well, time out, everybody. What is a deal to you? And what is a deal to Jake? And what is a deal to Gino? You need to know what a deal is for you, first of all. And the very first thing is you need to know the market. What market are you picking? I mean, we have students that come in or in 5 or 6 different markets. They're not focusing on anything. They're all over the place. So at Jake and Gino, we love to discuss the Buy Right framework. Let me show you the book. Buy Right, Manage Right. See the wheel over there? And you got the 2 legs in the back, Finance Right. The Buy Right's important. By the way, PDF copy, Gino at jakeandgino.com. Hit me up. I'll email you one because this is an important book. It talks about the framework. And the reason why we break it down is because each part of the framework can become pretty comprehensive. But when you break it down into that framework, you're thinking about it in those buckets. And in the Buy Right framework, the first thing you need to understand is what are your parameters? And I know Jake loves me when I talk about the 3 pillars of real estate, but the 3 pillars of real estate talk about the market cycle. I love that. Your creative cash. I'll throw that there. Hey, down below, leave comments. Ask what the 3 pillars of real estate are, and I can even answer for you. I don't want to go into this video, but it's the market cycle. And the market cycle is always changing. And what you need to do is you need to create a Buy Right criteria for the market cycle and for the market you're in. Now, if you're in a market that you're looking for 2-bed townhomes and there are none, well, guess what? You're not going to find anything in that market. If you're up in the Northeast and you're looking for 50, 60 unit apartment complexes built in the 80s and 90s and early 2000s in some parts of New England, you're not going to find that. Those markets have buildings that are built in the 1900s. So wherever your market is, you're going to have to focus on whatever your market is providing. Let me give you a quick example. I started investing in Rochester, New York back in 2008, 2009. Everything in Rochester seems like it was built between 1880 and 1920, nothing else. So if I'm up there and I'm looking for a new product, it's going to be very difficult. So learn the market. I was up there and I really narrowed it down. I went into a certain submarket. I went into a certain part of the city. I said, I'm not going west of this road. I want a certain median income. I was looking for duplexes at this certain price point. I wanted to know what the cap rate was, cash on cash return. That's what you need to do, everybody out there, to underwrite a deal. The first part is to create your Buy Right criteria. What are you looking for as far as number of units? How many units you can take down, whether you're syndicating, you're raising money, whether you're just buying a deal by yourself. What type of unit mixes? We love 2 beds, townhomes with garages that we can find them. That's what we like. We like brick. We like pitched roofs. We like median incomes. Pick a median income in your market. Some markets have higher median incomes than others. We're comfortable at 50,000 above. We want residents that can pay their rents. That's what we're looking for. Anything you drop below 40,000, it's getting to be a much more, I wouldn't say a rougher tenant base, a different kind of tenant base where they're more susceptible to recessions. If something happens, they lose their jobs, they can't pay their rent. So really become crystal clear on your Buy Right criteria.